Thank you all for joining. Per usual, it's your boy Hunter from Arbitrum here, community managing and space hosting. This time with the Gameswap team. Uh, this is going to be a very 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 exciting space. As a lot of you already know, there have been a ton of different projects launching in Arbitrum, especially as of recent. A lot that are innovating on existing some existing DeFi platforms, and some kind of just coming and really doing their own thing. And I think GammaSwap is just one of the teams that we're really excited to speak with today, to see pretty much how they're innovating on the current AMM model and all that great stuff. But yeah, how's it going? How's it going, guys? Everything good?
Yeah, everything's awesome.
Everything's great.
Yeah, we're pushing today on the test net because it's a little bit delayed, but we think we should be able to get it out tonight. So that's pretty exciting. But yeah, maybe how we can start it off is I can give a brief introduction on myself because I know we want to talk about the team a little bit, and then I can let Daniel, who's our CEO and also calling in from the GammaSwap Twitter handle, to give a brief background on himself and why he came up with GammaSwap. So yeah, brief background on me. I'm the co-founder and COO, helping out with growth and operations. My background, I started out in crypto in 2016, taking advantage of the chemistry premium and doing like some sex arbitrage between inner centralized exchanges and also some triangular arbitrage. So just really simple strategies. And then, yeah, unfortunately, when I graduated college, there weren't many jobs in crypto. I wish there were. So I kind of just started off in Web 2. So worked for a YC company that was doing billing management, and then another company that helped companies manage their software spend and usage. That got acquired. Then kind of went full tilt into crypto, trading for a while, um, working on some projects. And then most recently, I was at Figment. They do a lot of the proof of stake infrastructure in the space. I was helping out with institutional partnerships and developer relations. And I was actually judging a hackathon on behalf of Figment, Activate X Wormhole. And that's where I met the GammaSwap guys. And it was pretty appealing to me because I had kind of stopped LPing middle of this year, unless it was on like a new chain like Arbitrum or just really interesting like projects that had like strong liquidity money incentives. So that was what appealed to me first, like a way to hedge impermanent loss. But then, as I kind of saw the long term potential of basically building a new AMM model that would be more scalable because it would be a two-sided volatility marketplace. That's what really attracted me. I felt like I'd regret it if I wasn't full time. So, been full time on the project since May. Yeah, if you
All
want
right.
to Daniel. Yeah.
Yeah. All right. So just a quick background on me. I used to work as an equity trader in New York at a bank. I was in the algorithmic trading team. That was back in 2013, though, and that's also around the same time that I started trading cryptocurrencies on like my own as a side hobby. Then 2016 moved to another bank, algorithmic trading also, and about 2016 also that's when I left Wall Street and just kept on trading my own strategies. So fast forward to 2020, how I came up with GammaSwap is that I was providing liquidity in Uniswap because I had these long positions on Ethereum and Bitcoin, and I didn't want to sell them. Uniswap V2 seemed like an opportunity to make extra yield. So back then, yields were pretty high, like 100, 1,000% APY sometimes, and also the gas fees were even relatively low. Uh, so that went on until at the end of 2021. No, the end of 2020, and then by then, the end of 2020, beginning of 2021, there weren't that many opportunities anymore. So it was more of a question if providing liquidity was actually worth it. So I started researching into it. Try to understand better what's the expected value of providing liquidity in a place like Uniswap. Like prior to that, I was modeling it with Excel and trying to take into account, take into account the volatility, but it wasn't really much to think about when you're making like 1,000% APY. It's like 3% a day. So even if price moves 100%, I mean that move will have to happen over a period of 2 days in order for you to end up having a loss. So it wasn't that that much of a problem by then. But yeah, by end of 2020, beginning of 2021, there weren't that many opportunities anymore. So I researched this more, and I came to the conclusion that it was providing liquidity in Uniswap was giving you a negative expected value trade. So if it's a negative expected value, then if you do the opposite, then you're gonna come out ahead. So yes, I wanted to do the opposite, and but there's no way to do it. And I was living in New York at the time, so I couldn't even trade options. So I'm in Florida, and at the same time when I was moving to Florida, it was also for that time period in like middle of 2021. I was thinking about how to short liquidity in Uniswap, and well, I mean, the easy way is just to borrow it and pretty much short it. But there's no platform offering that service, and what it actually means to short liquidity in Uniswap. So I ended up I wrote a smart contract first, and just to see if there were technical difficulties with doing this, and there didn't seem to be any. And it's just that I guess everybody's mind was somewhere else, that they weren't thinking about this at least there weren't that many people back then thinking about this problem. But by the time I unit tested the smart contract and tried to break it, and it seemed like it made sense. Like there weren't that many risks with it. And so some risks seemed like they could be managed. Started writing also Medium articles to get an idea from other people, get some criticism. So to see maybe I'm doing something wrong, not thinking about this proper way. And also that's also around the same time that I was coming to the realization that this is like options really. You're trading volatility, and you're supposed to get paid for exposure to volatility, like risk. So so the yield should be related to that, not to the fees that you get paid trading, like commissions, for example. Yeah, so that didn't seem right. So then I started getting a lot of feedback from those Medium articles, and that's how I ended up getting invited to a hackathon to show the smart contract that I was working on. And yeah, so that's where we met Devin. At the time, a former coworker also joined me from like used to work with me at Wall Street. He joined me also for the hackathon, and that's also where we met another developer there who a pretty good developer who had previously worked in Facebook. And yeah, so we showed the product, people liked it, and wanted to work for it. So we've been working on it full time since then. That was in May of this year.
Love to hear too that sounds like both you guys were relatively active LPs before you decided to do Gameswap.
Yeah, this was my full time job. I was actually pretty upset. The yields were pretty low back then. I wanted to trade options in New York, but then I couldn't trade options even. And also the fact that this thing was so underpriced, it made it so appealing. Like like it's like money there for the taking, but there's no way to access it. So that was like a big motivation to look into this. And why is this happening? Because it's totally irrational. Like the insurance market, for example, they always make money because people are naturally risk averse. So implied volatility is always going to be overpriced. In Uniswap, you have the opposite, where implied volatility is underpriced. So that's something that's like an anomaly, and the only explanation for it is that there's no way for anyone to come in and buy volatility in Uniswap. So that's what's creating this whole problem in the market, and it's making it it's not priced correctly. And if it were priced correctly, then the token exchange mechanisms like DeFi would thrive much better, I think. And we wouldn't even need that many centralized exchanges for that reason.
Totally hear you there. I guess I just find it funny how is I think Devin also mentioned that he also was like liquidity providing as well, no? Like before.
Yeah, I was liquidity providing, but I was a little bit more of a degen than Daniel. So Daniel's like a really strong quant, and I just kind of saw cool projects and went in, and sometimes I had a pretty understanding of the fundamentals, and sometimes didn't. So I think we both have different perspectives in that way. But I've definitely done a lot of kind of like the really simple kind of like arbitrages, and we've even done kind of like some stat arb stuff.
That's wonderful. Just really cool how you guys can have two completely different backgrounds, but also kind of converge on like one project. So I think the obvious thing to ask here is what is GammaSwap? Given all what you guys have just told us.
Yeah, I can answer that question. So, the first iteration of GammaSwap is just a way to short liquidity on any AMM in any pool. So, that's Uniswap V2, V3, Balancer, SushiSwap, even new types of AMMs like SudoSwap. Anything that uses a constant product, we can short. And the reason why, I think, as Daniel was hinting, why you would want to use an AMM to short liquidity is one, that you wouldn't need an oracle. So you could basically hedge your liquidity position or even long volatility, get payoff similar to like calls and puts on basically any token. So, especially for like altcoins, like new projects that are super volatile, that could be a really profitable strategy. And then also, we think it'll lead to like more sustainable tokenomics because a lot of times like new projects will offer these really like inflationary liquidity rewards to help people compensate for the risk of LPing because they're exposed to a lot of volatility. Maybe the swap fees aren't there, and then also it's a new project like maybe they rug or the tokenomics haven't come out yet. But a better way is just to enable people to buy insurance on their position by using a small percentage of their yield and taking the opposite position. And then also because like implied volatility is so mispriced, like this should be a cheaper way to hedge than other options or a cheaper way to long volatility. And then it's also more of a perfect hedge because you could hedge with like a short or a perp, but the delta of that's 1 to 1. Well, delta in AMM is changing, so you'd have to rebalance like very frequently, and it can become like super complex. And because those options are well priced, you have to give up a lot of your yield to do that. So that's the first iteration. I think we have two pretty big contrarian theses. The first is that one, all AMMs are options markets disguising themselves as DEXs, and two, that AMMs are inherently inefficient because people are selling volatility but being compensated in volume. And volume and volatility, they have some correlation. We backtested in AMMs; it was about 50% on average, sometimes as low as 10%, but especially for new projects, like a pretty weak correlation. And a better model is just to enable a two-sided volatility marketplace. That'll enable people to basically new projects to track liquidity without offering super high inflationary rewards. People can hedge their exposure, which should just bring more liquidity in general, even to like some of the liquid pools like ETH, USCC, and then enable basically like new types of options markets. Basically, you could have like a liquidity layer instead of all these projects competing for liquidity. They can just use the AMM as liquidity and have different types of like options built on top, very similar to like what we're seeing with GLP and GMX, but in an AMM. And we think that way too, we can have DEX fees that are competitive with CeFi because the trend in everything is for like fees to be computed to zero. You saw that with stock commissions in the 80s, they were like $45. Now with Robinhood, they're like zero. You're seeing that with gas fees because of great roll up technology like Arbitrum. And in fact, you're going to see that in DeFi. And if you don't see that in DeFi, it's hard to imagine us being able to compete with centralized finance. So this is a way where we could actually make DEX trading feeless.
That's insane, and I think you mentioned a couple things there that may answer the question I'm about to ask here. But if there's anything else in terms of like how you guys are innovating on the current AMM model, I would love to hear more of that.
Yeah, I would say maybe I wasn't super clear on this because I kind of talked about some of the reasons why swap fees aren't like AMMs are low and efficient, but that's our long term goal. So mid 2023, we want to launch a new type of AMM that's just a two sided volatility marketplace, not compensated by swap fees at all, and a feeless DEX. And so we feel like that's not only going to enable DEX fees to be competitive from a swap perspective, from like a trading perspective, but also just more liquidity in general, because people are able to hedge their exposure, and there's going to be better in pricing of IV. like if you look at like TradeFi, like derivatives volume was pretty low until the Black-Scholes model was invented in the 70s and people knew how to price AMMs, or sorry, price options. And then now like derivatives volume is as high as spot or sometimes higher. And a lot of that's just used to insure like different positions, basically as insurance, but also because people now know how to price options. And I think that's a big thing in AMMs as well. Like it can become pretty hard to like calculate your position, especially with like concentrated liquidity and JIT. It can get super complex. So along with I think creating this new type of AMM model, we want to create like more education on actually how to like price these things in like simple ways. So we have for like our test net, we have some pretty cool graphs to show like different payouts based on the collateral you provide. Because if you like, for example, if you're shorting ETH USDC and you provide most of your collateral in ETH in the volatile token, you have like a payoff that looks like more like a call and a put, and you can actually hedge your exposure with a lot less of your yield. So I think that's something along with just kind of the different model that we're trying to do. So we're going to be posting more educational content around that. Hopefully have kind of like a university series, and then also partner kind of like with thought leaders in the space on helping educate people so that they understand the risks going into this. But I think another thing as well is just creating an AMM. If we create an AMM that's more efficient in this way, and people are selling volatility and other people are buying it, we also think this is a way for retail LPs to be passive and still expect to be profitable on average. Because like since 1993, implied volatility has overstated historical volatility 83% of the days in traditional options, which means that 83% of the days selling volatility was a profitable strategy. And so if we can achieve kind of a similar pricing in AMMs, then retail LPs can be passive and expect to be profitable on average. So that's our real goal, is to, I think AMMs, it seems, are becoming more complex. In a lot of ways, that's a good thing. And I think we need to offer these types of products for more sophisticated investors, but we also want to enable, anyone to be able to market make and, more or less expect to be expect to have positive outcomes from that.
Yeah, I just want to elaborate a little bit more on how we're innovating on AMMs. So far, the discussion about AMMs has been about improving slippage, trying to reduce slippage for traders, and that's something that's important. But it's not slippage is not really a concern to everybody. Also, it's only important if you're trading an order that's relatively large to the amount of liquidity available in the market. For a regular retail investor, which is what a blockchain would be mostly used if it's going to be used for trading. The slippage is not as much as a concern as it is commissions. So in the traditional finance industry, you had the market break into follow two different paths. One is the alternative trading systems like dark pools, for example, where they charge high fees but reduce slippage because they're able to aggregate a lot of liquidity that's hidden liquidity. Like people don't want to show how much they're buying or how much they're selling because they don't want to move the market. So there you can get filled without moving the market, but you're going to pay a high fee. And the other place is the public markets, like exchanges like NYSE, NASDAQ, where you don't pay you pay a fee, or you even get paid for providing liquidity there. Like you an order, a market order that's passive, you're going to get paid if somebody hits you. So you can theoretically trade for free if you're trading there, but the downside is that everyone's going to orders, and they're going to adjust the prices accordingly. So you're more likely to suffer a slippage if you have a high size order relative to the rest of the market. So that's how we think the whole AMM space is also going to evolve, where you're going to have two different places like Uniswap V3, for example, where people can do JIT, and for that reason reduce slippage, but you pay a higher fee. Places like Gameswap, where you can trade for free, but you're not going to incur high slippage if your order is small enough. Yeah, but if your order is very large, then you're probably better off going to Uniswap V3 in that case. But I mean, for most people, I think if a blockchain is meant to be for retail investors, really, I mean, if you're a high value investor, then like even in traditional finance, you're probably getting prime brokers from the investment bank. You're not going to E-Trade or anywhere like that. So so that's how I think we're also innovating in the space where we're creating this whole new model for dexes that didn't exist before.
So you both touched on it a little bit, but and I think we can all agree, by the way, that blockchains as they are today, and frankly, I think obviously more so in the future, um, everyone's going to be using blockchains whether they realize it or not. Frankly, I think the way we scale is through a more subversive way, where it's like you're using like an app that utilizes the blockchain. Some a thing where like you're not even realizing that you're using it, right? I think on that note, do you think that this product, obviously GammaSwap, is more catered towards retail versus institutional, or is there a world where it's really just kind of one or the other?
It's a good question. I can answer that first, and then I'll let Daniel add some color if he would like. So my thought is at first, because at least like seemingly are shorting the AMM liquidity, especially if you're going to be managing your own strategy to do so, can be a little bit complex. We kind of anticipate people who are doing that to be, more sophisticated retail or institutions looking to hedge their LP exposure. But we're also going to build out vaults to help people manage, basically hedge their IL kind of automatically, and yeah, so they can put in that automated strategy and do that. So we want to give people who are sophisticated and want to take out their own long volatility positions or hedge themselves the ability to do that. And then if someone maybe more retail or more passive wants to hedge their LP exposure but doesn't want to constantly rebalance their strategy or calculate what percentage of their yield they would need to do that with each time, they can just use one of our vaults. But I think down the line, as we were kind of hinting at, as we build our own AMM, that's going to be feeless, a little bit more passive when you're LPing, and then on the other side, we'll have actually like more traditional looking options, although perpetual. So it'd be like synthetic calls and puts that are perpetual, basically on any token. I think that's gonna attract people that want to hedge their bets, but it's also going to attract kind of like the Wall Street bets crowd, and I think that's going to be a great way to get retail in. So I'd say at first it's going to be more in maybe a combination, but I think long term this is going to be like mostly a retail facing product.
Yes, just to add more color to what Devin was saying. Right. So we think that in the beginning, most of the people that are going to use the platform are going to be more sophisticated investors. But I mean, down the road, the whole point of the project really, because it's on a blockchain, and a blockchain is meant to be used by lots of people that don't have to trust each other, which is not a problem institutions have. Then the whole point of the product is to become a retail product. So that's how we envision this product to be in the future, and that's also one of my goals is to make it as simple as possible that anybody can use it. And I mean, like you don't even have to be constantly managing your order. You can just you can just be passive in it, like ETFs, for example. ETFs made it passive for, I mean, easy for the retail investors to invest in the market since they can just be passive, and that's those strategies attract lots of liquidity. So we think uh, building it this way, a platform you can sell volatility like options market maker without actually having to manage your delta constantly because the implied volatility itself is going to compensate you since it's a yield that pays over in perpetuity. Is something that's very attractive to a lot of our retail investors.
Yeah, I think in a lot of ways, long term, we're going to end up looking kind of like a GMX maybe, but with a totally different implementation, in the sense that we're going to have like LPs kind of have like something like GLP where it's pretty like it's not super risky. I mean, there is some risk. There always has to be risk. There's no free lunch, but I think people who are more passive and maybe not wanting to manage a super active strategy can expect to be profitable on average by providing liquidity. And on the other side, we're going to have lots of different types of people hedging, wanting to get leverage exposure to like different like altcoins. On the other side, taking out these like options, and I think there's also, if this model like works well, this could also be like a central liquidity layer for other DeFi protocols, because since we have that two-sided volatility marketplace, we can help with some of the mispricing of IV. Because if you look at like some of the option protocols right now, you'll have they basically try to bootstrap a lot of their liquidity, and they're doing really interesting things, but often the risks are heavily weighted to one side because the IV isn't priced well. And then you'll have like one side, for example, like the buyer of a straddle, like the buyers of straddle is like totally sold out, and then the APYs to write that are super high because of the risk on each side. So I think if we have a liquidity layer that's like pricing it well, people can build like different types of options. So we'll have like, for example, ours that are perpetual because it's an AMM, but anyone could come and build like different expiries, build different vault strategies on top, um, funnel the liquidity into some completely different type of protocol, maybe even some innovation on like a lending market. So I think there's a lot of things that could be go with this, but we're trying to hopefully solve, I think some of those fundamental issues just with DeFi scalability in terms of pricing of IV, and then also like I would say like efficient like liquidity mining incentives.
I love that, and I think, by the way, this is like the conversations like these is what makes me love just seeing kind of projects, and I guess to a certain extent like businesses being built on crypto, because there's just so many different routes you can go. And I mean, frankly, like making sure obviously, the project that kind of fulfills its initial goal is important. Let's say for example, making sure that like retail or institutional people can use it, but also like you kind of hinted at, like it's possible like at some point GameSwap becomes kind of like this layer that people can build on top of, right? And that's really only possible because we're using the blockchain for it. Um, yeah, no, I mean, and conversations like these is what really makes me so bullish about DeFi, frankly.
Yeah, exactly. And that's something that attracted us to the Arbitrum ecosystem, because we're obviously huge fans of GMX, huge fans of a lot of the other protocols building on top, like Umami. And I think that's like that's something I've noticed about the Arbitrum community is how like strong it is, and how collaboratively like the products build. And I think that's like we did the spaces earlier with risk finance. It's not launched, but they're planning to launch on Arbitrum and Umami. And that was the thing we were kind of saying is like the next step for DeFi derivatives is, instead of trying to compete for liquidity and bootstrap that all on your own, I think we're going to see more composability, because I think that's, once we have like different options and liquidity for a lot of these different types of protocols, that's how we're going to bring in more people and basically help mature like the different products and the space a little bit faster.
Totally agree. And I have to note too, because I mean, obviously, you guys are really doing something insanely different here. Like, who else is on the Gamma Swap team? And I mean, I guess obviously, like you guys met a specific way, but like, how did everyone kind of meet?
Yeah, so I met Daniel, who's on the line now with us, the CEO, at the hackathon. And yeah, I originally came on as an advisor actually, but the more I learned, the more I wanted to join full time, and helping out with a lot of the marketing and some of the partnerships, and doing some of the helping out with some of the back testing as well. Or just basically the other areas where I could be helpful for. Uh, so yeah, Daniel's the CEO. He's been a quant, I guess, basically for almost 10 years, like a decade now. Part of that's been at different big banks, and a lot of that's been trading his own strategies, which I think is really cool because, yeah, I think a lot of the theory is important, but also experiencing these different types of protocols and firsthand, like seeing where some of those inefficiencies come in, and yeah, seeing the evolution of how these protocols have evolved over time is super important. So I think that's something that Daniel has uh, that's really helpful. Is he's been basically in the space since the beginning, um, since 2013. And then we also have another co-founder who's a little bit younger. He's actually still in college, but taking a gap year and then potentially dropping out after that to work on it. And he did an internship at Meta and then one at Liberty Mutual. He's been helping us out a lot of the front end and some of the Solidity development as well. And then we had another person on the team as well that worked with Daniel at UBS that was helping with some of the Solidity stuff. So right now we're about I guess 3/4 people, and we're looking to expand the team pretty quickly. So we're hiring for quant, and then we're also hiring for Solidity engineer. So yeah, if anyone on the call feels like they would be a good fit and is interested, please yeah feel free to DM us on Twitter or just submit those applications, and we're definitely interested in yeah learning like hearing more from you guys.
That's insane. So that means that we're pretty much speaking with at least half the team right now.
Yeah, we're still very small.
That's insane. Wow. Well, okay. I think obviously we've heard a ton about Gameswap. I think what I'm sure what a lot of people would like to know is when launch, and what can we expect on day of launch?
Yeah, so testnet we should have today or tomorrow. We were having some. We were gonna launch on Grelly, and then just because of the amount of like scripts we have to run the testnet, the amount of contracts we didn't have. It would basically take us like over a month with the faucets to get enough tokens to launch this. So now we're doing a private server and we're changing all of like the deployment scripts and stuff. So that's what we were planning on launching last week, but that's what's been taking up a lot of our time. But we should have that soon. And then mainnet, we're hoping mid to late January. We're starting our audit now, so that should line up in time from the audit. But yeah, sometimes things come up, and I think it depends on how many like AMMs we want to launch out of the gate. So we can definitely do like Uni V2 and Sushi out of the gate. For something like Balancer, for example, we'll have to build an adapter on that to detect the different smart pool contracts, and then of course for V3, taking into account concentrated liquidity. So if we launch mid to late Jan, it would be V2 and Sushi off the gate, and then we could add Bouncer, and V3 maybe even within the first quarter. And then yeah, as I kind of mentioned, building some of those vaults out. That's a way to enable people to hedge automatically in our platform, but also a way for us to partner with other protocols. And you know, since we can work with like any AMM, we can hedge IL and like VAMM. So a lot of these new like protocols coming out, we can kind of partner with them to get more efficient liquidity provisioning, and then building out like some structured products with partners. And of course, that was something I said as about Arbitrum, because a lot of this just seems to be a lot of innovation in the DeFi space here. And of course, just the benefits of low latency, which I think will help people in our platform because they can close out those long volatility positions faster and capture those gains faster. And then our AMM hopefully mid 2023, but yeah, when launch late January.
Nice. Appreciate that little shill for us, by the way. Thank you.
Of course.
That's great. In that case, then, like, and you kind of touched on it a little bit there, but I mean, in terms of like ecosystem partners, it's something we always ask, like, partners who ever come on AMAs with us. Like, are there any ones that you guys are in particular looking to partner with? And I mean, I guess other than the AMMs you'll be building on is what I mean.
Yeah, so we're talking to some protocols about like vault partnerships, hedging the VAMs, and or just building vault strategies, or just using us in a treasury management strategy. So I think that we have we have some good kind of like partnerships already forming from that. Where what I would find interesting is we don't have plans on building on expiries in our platform, but if a protocol wanted to build like expiries off of us, basically on different types of options, that could be really interesting because I know a lot of like TradeFi folks like to play around with that, and people from that industry or just traded like traditional options like that because I think it's just more familiar with them. They understand the risks and rewards of that pretty well, or have a strong trading strategy based on that, or even just arbing kind of those options with like centralized options like Deribit or other ones that are out there, or a little bit easier if they're expiries since it's more of a direct arb. So that's one that we'd be interested in partnering with. I think there are protocols out there that are doing that, but we haven't had any specific conversations on that. But I think that could be pretty cool if someone built that on top.
That's dope. I love that. So before we do hit uh, the community with any questions they might have, and I think I already see a couple people in the chat raising their hands. Um, is there anything else in your roadmap that maybe we can look forward to post launch that you didn't already mention? I know you mentioned a couple things, so I just want to make sure we're covering everything.
Yeah, no, I appreciate that. I think we've covered pretty much everything. There's some really big things we're thinking about. I think that could really be revolutionary in DeFi, but we need to hone in on the implementation before actually like talking about publicly at all, since we're still kind of ideating like internally. But I think there's like more things we have in mind, and I think there are things also that could be built potentially on our platform or with us that we haven't even imagined yet. So I think there's potentially more innovation, and I think once we launch and kind of really start, seeing how this like the markets play out, I think that's where we'll see really interesting things. And I think that's just generally the cool thing about DeFi is that there are products being built and like strategies being built that weren't even possible in traditional finance, and it's hard to even imagine what they'll look like. But because it's just a totally different type of technology and ecosystem.
I totally hear you on that one. All right, cool. So then, in that case, anyone in the chat, feel free if you have any questions regarding GammaSwap and what we're going over today. Feel free to raise your hand, and I'll make sure to bring you on up. We do have one person already having their hand up, so I'll actually bring them up first. Yeah, let's make sure it's GammaSwap related. Waiting for. Oh, they just left. I think they were connecting. Let's give it about a minute just in case.
Yeah, no worries.
All right. Adding Turban Ether. .eth.
Hello, can you guys hear me?
GM.
Perfect. Hi. No, I mean, very exciting stuff. Loving what I'm hearing. Big fan of derivatives, also DeFi. The reason why I got into crypto specifically was reading the Uniswap paper and realizing that they just wanted retail to sell well, which I thought was beautiful. But specifically in the context of GammaSwap, just to make sure I understand it correctly. So liquidity providers are being compensated with an additional fee that's related to borrowers borrowing their LP token. But how do you guys, I guess, determine the rate of borrowing exactly? It's just a linear function of utilization, or how do you exactly set that?
Yes. So it is based on a utilization rate, but it's not a linear function because the relationship between implied volatility and the yield is actually quadratic. So like it's exponential. So the same relationship here is also in the model is also exponential. So as liquidity dries up for LP tokens that can be shorted, the yield starts shooting up, like going up very high. So it's not a linear function. It's exponential actually.
Got it. So if I'm borrowing the LP token, I have to pay an exponential function of the utilization, plus whatever the, I guess, accrued trading fees would have been for the LP position. Is that correct?
No, well, so if you're all right, yeah. So what's accruing, right? Yeah. So you would owe what's left or what's accrued on the LP position, and also the interest rate that's on top of the LP position. And it would be different depending on if you have a market that's like Gamswap's DEX, for example, is not supposed to charge any trading fees. So then the function would have different parameters for the interest rate, since you no longer have to pay the trading fee.
Got it. Cool. Makes sense. Thanks.
Thanks for coming up. Let's see if we have anyone else with any questions raising their hand.
So Yuri, I don't know if I'm pronouncing that right. Raise their hand.
Oh yeah, let me see where.
Could have been another emoji too.
Oh, yeah. That's actually a good. Okay, it's a good distinction to make. Okay, make sure you request to speak. That's what I meant by raising your hand, guys. If you raise your hand in the emoji, I'm not going to see it.
Yeah, good call.
Actually, I have one maybe obvious question, but maybe not so obvious to those who aren't active traders. Why Gameswap? Like, why the name?
Oh, all right. Yeah. So it's related to gamma is the second derivative of the value of the option, the price of the option with respect to price of the underlying in the Black-Scholes model. So since normally when people are short volatility, they're saying the short gamma, or the long volatility, they're saying the long gamma. Well, since the platform allows the exchange of volatility exposure, somebody wants the long volatility or short volatility, then yeah, it's a gamma swap. So you're swapping gamma.
Love it. On that note, Turbanetha is coming back up. You have the stage. Turbanetha, you there? All right. If not, you can just raise your hand again. Just in case, for some closing notes, for those who do want to participate in Gameswap, or from a contributor standpoint, or even just join the community, how would one go ahead and do that?
Yeah, that's a great question. I would say just joining our Discord. That's where we update people on Twitter, but that's where I think it's easiest to actually ask those questions and talk to other community members. So initially, I think that's the best way to join our community. And yeah, when we do launch our testnet, which should be this evening, hopefully latest tomorrow, we're going to create a channel in there where people can add their wallets. We'll send them tokens and actually participate in the testnet. So you'll definitely want to be a part of the Discord if you want to try the testnet.
Awesome. Yeah. Yeah. I'm definitely gonna join it right now, just so I can do the little testnet stuff. Oh, here we go. Okay, before we end off, let me bring up this last person. See if they have anything for us. Four Cards Capital.
Hey guys, quick question.
You got the stage.
So is there already some demonstrated demand for longing volatility on a lot of these pairs? And if not, where do you think the demand will come from?
So I guess where I see the demand to long volatility is basically when people buy options to hedge, because yeah, that's anytime you buy an option, you're essentially longing volatility. So I think there's already demand there, and if you look at like some of the other options protocols as well that sell like these long straddles, a lot of them are sold out, and I mean, not even taking those things into consideration, like there's a basically more demand to long volatility in traditional finance than there is to sell it, and that's a less volatile market than crypto. So, I think is there demand to long volatility? Yes. I think the more difficult question is this the right implementation, and how can we build the easiest and most straightforward way to do that on top of the AMMs? I don't know if there's anything else you want to add to that, Daniel.
Yeah, well, so just like you were saying that there's more demand for long volatility. So no, the thing is that normally implied volatility is higher than realized volatility, and that's that's not an anomaly. That's like a natural state of the world in which people are natural risk averse because you have to be risk averse in order to stay alive, pretty much. Like you can't just be risk seeking, otherwise you'll have a short life. So for that reason, then there's always going to be more demand for insurance than there is selling of insurance. So if demand for insurance, buying insurance is pretty much buying volatility. You're buying the probability that the bad scenario is going to happen. So for that reason, I mean, this is normal, expected for there to be more demand for volatility. So if you have a market like AMMs where volatility is underpriced, then that's an anomaly that can be a natural state of the world. That has to be related to just a market structure not being properly built, and that's the reason why that's what we're trying to fix.
Awesome. Thanks, guys.
Of course, yeah. Thanks for the question.
All right, nice. Yeah, I think we can maybe. What do you guys think? Wait for another question just in case, and then if not, we can end off.
Yeah, sounds good.
All right, yeah, I think we can probably end off here then. If anyone does have any questions, they can probably just jump in the Discord, right?
Yeah, just jump in the Discord, and yeah, we're really trying to push to get this out as soon as possible. So we may be a little bit slower than we'd like, but once we get this initial kind of state of the testnet launch, I think we'll be able to answer questions a lot more quickly. But yeah, we'll get to them for sure. So yeah, if there's any, please ping us in Discord. Also, if we like post a tweet or a thread, you have a question, just reply, and we'll try to get back to you as well.
Awesome. Well, with that being said, I really appreciate you guys for coming up today. Appreciate you educating us on Gameswap, and we look forward to you guys launching.
All right, thank you. It was a pleasure being here.
Yeah, thank you for having us.
Likewise. Have a good one, y'all.